All right. So if I had to start over completely from scratch today, I'm talking about no properties, no network at all, no money at all, right? Here is exactly how I would rebuild my multi-million-dollar real estate portfolio from zero. The cool part is I could do it even faster this time around than the first time. And just to put that into context, I've been financially free through real estate in less than 3 years. Currently, I own over $25 million of real estate that more than cover all of my living expenses, and I'm only growing. Like literally every single month, I'm buying more properties that are paying me more and more with every single deal that I do. The cool part, I'm going to show you how you can do it even faster than I did it because you have all the knowledge that I've created essentially over the last couple of years. The crazy part is that most people you talk to, they're going to tell you that you need to save for 20 years. You need to have absolutely perfect credit, or you need to come from money to do any of this. Well, full transparency, that was not me. I do not come with a silver spoon. I did not win the lottery. I have learned and implemented a ton of awesome strategies that I'm going to literally share for you, regardless of where you're at in your investing journey. So another piece of lame advice I hear is, hey, I want to start investing in real estate. What people will tell that person is, hey, you should go become a real estate agent. That's like the dumbest thing I've ever heard. I'm not saying if you're a real estate agent, that's dumb, but I'm saying if you want to become a real estate investor, you do not need to go become a real estate agent. First of all, over 70% of real estate agents did not do a single transaction in 2024. Literally, they didn't make any money at all, and they spent the time, money, and energy to become an agent. Just because you are an agent, that does not make you a better investor. They're totally different things. You can be a phenomenal investor and agent, but there's no reason that you have to be an agent if you were starting from scratch. Once again, that is something I have definitely not done. So in today's session, I'm going to show you the exact path I'd take, whether you're an absolute beginner, you're already an intermediate investor, or you're an advanced wealth builder. I want to show you exactly what I would do. A lot of it I actually did do, but now I have even more knowledge and would do it a lot faster so that it can benefit you no matter where you are starting from. So if you're absolutely brand new, or you're already doing deals, but you want to scale, grab your notebook, please. I'm going to be breaking this stuff down step by step. This is like a true roadmap of what I've done and how you could do it faster and better, and even how I would have done it even faster and better with all the knowledge that I have. Grab your notebook. This is going to be an action-packed session. You're going to have to watch it a couple times, and it'll be well worth it. So let's start with the very beginning. Real estate investing, we want to understand the big picture overall. Like, what is financial freedom through real estate? That's number one. That's the first thing that you want to be doing. So let's start with why real estate even matters. The cool thing about real estate, or the cool thing about financial freedom in general, is it's actually very simple math. For real estate, it's when your total rental income exceeds your monthly expenses, you are then financially free, right? So if you're spending $5,000 a month on your real estate portfolio, but you're getting $10,000 of rental income, you're making $5,000 a month that you get to keep. That is your money. And if your living expenses are $5,000 a month and your real estate portfolio pays you $5,000 a month, congrats. You literally never have to work for someone else again, because your entire lifestyle expenses, all of your expenses are covered through a real estate income. Hopefully that makes sense. It can't get much easier than whatever your profits are from real estate, they need to exceed your personal expenses so that you are financially free. And honestly, even if you're spending $5,000 a month and you're only getting $2,000 a month profit from real estate, wouldn't you be pretty thankful and pretty happy to know that that's $2,000 less you have to earn every single month? That's $2,000 of your living expenses that are covered through real estate. That's pretty sick, especially because you get wealth benefits as well. I'm going to share something very quickly. If you know anything about me, you've seen this one plenty of times. Let me share this guy right here. What I just presented to you was cash flow. Basically, your income from real estate minus your expenses in real estate, what is left over is your cash flow. That is what you get to live off of, and that is what makes you financially free. The awesome part about real estate is you don't get cash flow. Your properties increase in value, so they grow in value over time. Your tenants are paying you, and you're using that to pay down your debts. So both of these are adding to your wealth, and you get tax savings, so you get to keep more of your money. I add this leverage piece, which if you're a beginner, this is not the thing for you to think about, but the more real estate that you do, the more knowledgeable that you get, the better your skill set at getting deals, at raising money, the faster and better you get to grow and scale in your overall investing journey. But for right now, financial freedom comes from your cash flow. What is your net profit? And we'll get into that in more detail shortly. Let me get to this one. Excellent. All right. Let's go here. Boom. All right. So before anything, before we could even worry about, okay, real estate will make me financially free when I have this much money coming in from cash flow, the first thing you want to do is what I did and what I recommend anyone to do. So beginners, honestly, beginners, intermediate, advanced, I don't care where you're at. The majority of people have not done this. They don't understand how you actually become financially free through real estate. Specifically, they cannot develop a very good and specific plan. I'm giving you all the education tools and resources to do that within minutes. So the first thing I would do is pull out my budget and financial freedom tracker, and I'm going to give you that for free. So you can calculate how much do you spend every single month. So then therefore, how much income do you need to replace that spending? And then doing some looking at some simple assumptions, we're going to figure out exactly how much you're going to need in total cash flow, right? And so that's going to lead to how many properties you need to be financially free, how much money you need to buy that portfolio, and roughly what's your time frame for getting there. Cool. All right, let's do that together. But by the end of it, you'll have a very specific roadmap. If you're spending $5,000 a month and every single property is netting you $500 a month of cash flow, you'll need 10 of those properties to be financially free. 10 properties times $500 is 5,000 income, 5,000 in expenses. You are financially free. Very simple, predictable, and achievable. And I want to show you how you can do that and how you can find all those resources. So first thing we're going to do is you're going to go to my Instagram at MichaelMNAT, because from there, we're going to click this link. That's going to take you here. This is all a bunch of cool tools and resources, calculators, YouTube, everything under the sun. But you want to go to my free Wealth Through Real Estate School community. So for you, actually, it's going to look something like this. If you're not in it, you just join. Over 1,700, almost 1,800 awesome other investors in here. You go to the classroom where I provide tons of free trainings, tools, and resources for you. But you're going to go to the Financial Freedom Blueprint, skip past some of these financial freedom trainings, which go super in depth, which you're more than welcome to take advantage of. And then you're going to click the Budget and Financial Freedom Tracker to grab a free copy of the exact spreadsheet that I use. It's going to look just like this. You're going to make a copy. And here you go. So the first thing you're going to do is you're going to put in your income. You're going to put in your expenses. Okay. That is foundational. Most people don't even know how much they're making monthly. That one's a little bit easier, but really how much they're spending monthly. I put the projected versus actual. You only really need the actual, but it's a really good exercise for you to estimate how much do you think you're spending on some of these categories? And then what is the actual cost that you get? What is the actual cost when you go back and actually look at this? Common one is insurance. Like people think they're spending $100 a month, they're spending $200, or their groceries, or they're eating out, like whatever it is. They always typically under project what they're actually spending. And then you just designate what of these are needs. What do you actually need in your life from here versus what are wants? What are the things that you can live without? Perfect example, right? Your housing, that's a need. But cable, if you were to get cable, you don't need cable. You can do what I do and just stream a bunch of stuff. That's a want, right? And you just go and break that stuff down. Then what that does is put it into this beautiful little budget summary for you, all automated, telling you income, deductions, expenses, savings. What does that look like? More importantly, breaks it down by category and then tells you how much are you saving each month. The most important reason for this is you want this financial freedom progress tab right here. It'll tell you To be financially free, to cover all of your needs every single month, you'll need $4,960. It's just summarizing this information that you put in there. Based on your needs, what you have said are your needs, how much would you need to come in every single month to make you financially free? Well, that's $4,960. The real threshold for financial freedom, in my opinion, is when your needs and wants are covered. I did not want to be financially free and live the bare minimum existence, just my needs. I wanted my wants covered too. I wanted money for vacations and travel and all that other stuff. And you just want to see what that looks like in your on your path to financial freedom. So in this instance, it'd be $5,830. Great. You need that much money coming in to truly be financially free to cover all of your needs and wants through real estate. Another target, right? Have 4 levels of financial freedom: your needs and wants, then 2 times your needs and wants. So if you're going to inflate your lifestyle and live twice as much as you're spending now, this is the monthly goal. And then a lot of people bring me their generational wealth legacy goals. I want $20,000, $50,000, $100,000 a month coming in every month. Great. You want $1.2 million a year of tax-free wealth building, awesome cash flow from your real estate portfolio. Great. I want that for you. That's your legacy goal. More importantly, you're going to take this number. So I have automatically the needs and wants pulls right into here. Your financial freedom monthly goal should be at least your needs and wants. Let's achieve that. Well, you're going to estimate how much monthly cash flow will you get per property? How much will it cost to purchase each property, purchase, renovate, reserves, all that good stuff? And then how many properties do you plan on buying a year? This is super important. You can just use whatever this number will come from your budget, but these numbers are just estimates based on how I invest, but more conservatively. And this will tell you quite literally, okay, if you want $5,830 a month and you're making $500 a month cash flow per property, and it costs you $100,000 per property, and you're going to buy 2 properties a year, that's all you need to define your very clear path to financial freedom. This is foundational for wherever you're at in your investing journey. So the number of properties that you're going to need are 11.7, or we could round that up to 12, right? You're going to need 12 properties to cover this. The number of years it'll take you to buy 12 properties, buying 2 a year, is 6 years. If you get more cash flow per property, you need less properties, right? This is why I do co-living. This is why I do advanced strategies to achieve my goals, to get way more return per deal so I can get them faster with less investments. The next thing is, if you're buying more properties more quickly, right, that generate better returns, or you're buying, let's say, instead of 1 every 6 months or 2 a year, let's say you're buying 1 every 3 months. You can get to this goal of almost $6,000 a month of cash flow and all the wealth building with 1.5 years buying 6 properties. Okay. So now you know how many properties to achieve this cash flow, how long it'll take you, and then how much money you need to actually do all of this stuff. So very simply, you now have a financial freedom goal. Most people don't have this defined, at least to some extent. I'll tell you, when I started 5 years ago, my goal was I will have $6,000 a month of cash flow in the next 5 years by buying 5 small multifamily properties. And that's where I'm going to get into when it comes to the beginner training, because that's where I would start day one if I had to restart today. But you need to understand your path to real estate. What is your actual path to financial freedom through real estate? So I will achieve financial freedom by generating $5,830 a month income in 1.5 years through, this is me as a capital raiser, through raising $583,000. You can use your own $583,000. Most people don't have that. So that'll be part of my advanced education for you guys on learning how to raise capital. But really, I will need $583,000 to buy 6 properties in 1.5 years to be financially free. All right. You have a path. You have a roadmap. The goal is that you have a roadmap and you freaking crush that. Right. And that was my goal. 5 properties, 5 years, $6,000. When 5 years, I bought over close to 100 properties, generate $20,000+ a month. And I just destroyed all my goals. I was financially free in less than 3 years with way more properties and way more cash flow than I could have ever imagined. I want that for you, but you need to start somewhere. That's what this is. All right. So we talked about financial freedom. You defined your path. That's literally 0. Step 0 for everyone. Before you even start, define your financial freedom path, and that's going to come from your actual expenses. You give yourself a roadmap. Is it going to be perfect? No. Who cares? You need an actual roadmap to follow so that you are tracking your progress and you have a rough idea. Humans have a very hard time of achieving results when their goal is very abstract. It's one thing to say, I'll be financially free from real estate. It's another to say, I'll be financially free through real estate by buying 6 properties that each cash flow me $1,000 a month. So that's going to total $6,000 a month cash flow in 1.5 years by buying 4 properties a year. And it'll cost me $600,000 to achieve that portfolio, right? That's more definitive. That's more straightforward. At least it gives you something to actually work with rather than a vague goal. So the first thing for everyone, have a clear real estate investing goal. Now, if you're in the beginner phase, right, I'm going to break this down into the beginner, intermediate, and advanced phases. And these are a lot of what I did personally. I've basically done this exact journey that I'm sharing. This is even more condensed because you have the luxury of me already doing it and sharing it with you. But I'm going to be breaking it down and what I would have done, well, what I did do, and what I recommend that you do regardless of where you're at, beginner, intermediate, or advanced. You can skip to any of these based on your experience level. So for the beginner phase, your first 90 days, this one is extremely vital. Your job right now is to learn the game and then start investing smartly, right? Learn the game and then start investing by making good, smart decisions. So if I was restarting as an absolute beginner, the first thing I would do is I would understand the basics of real estate. I showed you the very basics of real estate, which was, well, it's actually really simple. I'll just explain it again. You buy a property that makes you more money than it costs you to own. If it costs you $1,000 to own this property, you want to make more than $1,000 in rental income to buy the property, right? Actually, let's phrase that better. If it costs you $1,000 in expenses, you need a rental income of over $1,000 before the property makes sense. That is the most simplest way to define your cash flow. Your cash flow, your monthly profit, is your income minus your expenses. That is this. That's this. Your cash flow is your income minus your expenses. There's also reserves. We're not going to get too far. Oh, that is this. Your cash flow is your income minus your expenses minus your reserves. Don't even worry about this right now. Your goal when you're starting out is to understand your goal is to buy properties that generate you more income than your expenses on that property. Whatever is left over is your cash flow, your profit that will make you financially free. That is already hard enough for most people to understand because they're buying terrible properties over and over again. Next, you just take that cash flow and multiply it by 12 to say, what is your annual income? If you're making $500 or your annual cash flow, if you're making $500 a month times 12, that is $6,000 of annual cash flow a year. You take that annual cash flow and you divide it by the amount of money it took you to buy, renovate, and operate your property. That then is your cash on cash return, right? That is telling you how hard is your money working for you. You want to make sure that your properties are cash flow positive. You're making money every single month. Your income exceeds your expenses. And then your cash on cash return tells you, was this a really great investment or not? Is the amount of cash flow that you're generating, is that worth the amount of money you had to put into the investment itself? That is the very basics of real estate investing. And that is where I would start with if I was an absolute beginner, is understanding that core concept. So understand cash flow, understand your cash on cash return, understand the basics of deal analysis, understand the basics of real estate investing. Those formulas alone will literally change your life and already put you ahead of the majority of people that say, oh yeah, I want to do real estate investing. Now you have a clear path and you understand the most important calculations to actually achieve your goals. So you're already ahead of the majority that say they want to do it, but don't even know where to start. Well, the next step is you got to actually learn the strategies. It's good enough to say, okay, I have a path. I understand the basics of deal analysis. Well, you got to learn the strategies. So for example, take a week to learn the main real estate strategies. They fall into long-term rentals, people renting out your property long-term. So the family moves in and they rent it out. Mid-term rentals, typically it's a furnished rental that someone is renting out for 3, 6+ months. Short-term rentals or vacation rentals, think of Airbnbs. average stay of less than 7 days, vacation style, or my favorite strategy, the co-living or rent by the room strategy, right? So you get a house, you furnish it, and then you rent out each individual room, which is different than a midterm, right? The midterm, they're renting out the whole house furnished. Co-living, you're renting out each furnished room individually to different people. My opinion, don't try to master all this. Just learn how each of them works and then pick one. If you want exactly what I would do, it's co-living all day, every day. It's the best strategy, head and shoulders, and I'll explain why coming up. Next is to choose your market. You have your path. You understand the basics of deal analysis. You have the strategy you're going to implement. Well, you got to choose a market. Where are you going to invest? You have to figure out where you're going to invest so that you can actually take some real action. You can start connecting with other local investors, and you can start learning what do the actual returns look like in this market and building those relationships that you need to actually achieve the results that you want with your strategy. So some people like to choose where they live, right? That's up to you. Some people think that's an advantage. I think it's better to choose markets that make the most sense for the investment strategy that you're doing, as opposed to just choosing what is close to me. For me, as a co-living investor, choosing a market is made fairly easily because I use data from the PadSplit platform, the #1 rent by the room platform for co-living data. And basically they tell me where is co-living like working really well. If you don't know how to do all that, that's fine. I got plenty of YouTube videos, and it's in the free Wealth to Real Estate School community of mine that you can then look at that. All right. Chose your strategy. You chose your market. Your goal now is to analyze 100 deals. I don't actually even expect you to buy a single property of those 100 that you analyze. You might, and that'd be a phenomenal cherry on top. What you need to do is have a very clear buy box. I'm buying these types of properties in this market. And then you're getting very good at analyzing those deals, because every single deal that you analyze builds your muscle. It builds your skill set of clearly understanding your income, your expenses, understanding what renovation costs would be. Taking a look at 100 plus properties in your market is going to make you really much more skilled and much more confident with your investment strategy. More importantly, you're also going to build the right network of relationships that you need. For example, you can talk to agents, you can talk to other investors, you're going to talk to contractors, you're going to talk to cleaners, you're going to talk to utility companies, insurance providers. All of that is being done while you're analyzing your deals, because you have a chosen market and a strategy. You can build that Rolodex of great resources that you need. So if I was to take my first action in real estate investing, now it's actually buying the deal. The first deal, your first real deal, buying it. What I would do is exactly what I did to start out. I did not go and buy a rent by the room property out of state for my first real estate investment deal. If that's how I was supposed to start off, it would have been very tough for me. And honestly, I didn't have the finances to be able to do so, or really the experience or confidence to do that myself. So the easiest path for beginners is exactly what I did. House hack a property. What that means is one of two options. You buy a really big house, you live in one room, and you rent out the other rooms. I've never done that. That's not something I want to do. Instead, what you can do is you can buy a 2, 3, or 4 unit property, live in one unit, and rent out the other ones. So for example, I've done that with a 2 unit, a 3 unit, and a 4 unit property. I've always lived in one unit. My wife and I did this. We understood the sacrifice that we were making for our long-term financial freedom and wealth building, and it was worth it for us. The cool part is when you're owner occupying a property like this, when you are house hacking a property like this, there's a lot of advantages. As at the time when I bought my first property, I was in the Army. I was an officer, so I made more than enlisted, but I made around $45,000 a year of income. Was that like $22 an hour? I had a little bit of extra money that came in for housing and for like food allowance. But like in total, maybe at the highest, $60,000 during the year as income. So around $30 an hour. That is better than most, right? And I'm not gonna act like it's not. That's better than a lot of people, but it's also below the median income. So this is what I did. I had to do a strategy which didn't require a lot of money from me and that I could actually finance. So what I did was I used a low down payment loan option. I was in the military, so I had a VA loan. I could put 0% down payment and buy a 2, 3, or 4 unit property, just like I could do with a single family home. But instead, I was able to buy a rental property that I lived in one side, rented out the rest, and my tenants covered all of my mortgage. And I even made extra money each month. On top of that, when I moved out, now it made a lot of money because the whole property was rented out. If you're not a service member or veteran, great, that's fine. There's a 3.5% down payment FHA loan you can use. Same for a 2, 3, or 4 unit property. There's a 5% conventional loan that you can use. So for every $100,000 property value, that's $5,000 conventional loan. So if you're trying to buy a $400,000 4 unit property, it's going to cost you, what is that? $20,000 to get into that property. So yeah, you need some money to start real estate investing, but you don't need hundreds of thousands of dollars if you're going the house hacking route. So if you're an absolute beginner, I just gave you the exact roadmap. You have your game plan. You know what you're going to want to accomplish. You understand your budget and you mapped out your real estate path to financial freedom. Then you learn the basics of real estate investing. If you want the basics of real estate investing, I already give the basics and then some away for absolutely for free in the Wealth of Real Estate School community. If you don't know where to find that, I'm going to just show you real fast. So we were here, right? We were here before. So we're going to go to classroom. You can learn the basics of real estate investing right here. And I mean, these are pretty in-depth videos. There's a lot here. And then if you want to learn the basics of creative financing, that's all here as well. If you want to watch one video, come to this one, Real Estate Investing Analysis Masterclass. This is the A to Z. You'll know everything that you need to through this one video alone. Less than 2 hours. It's all for free for you. Take advantage of it. Then you get the free real estate investing calculator so you can actually analyze these deals. All right. If you want to learn some basic co-living stuff, great. That's in here as well. Bunch of stuff on co-living. All right, understand the basics, and you don't have to learn it from the simple thing I just shared. You could do it from the free tools and resources I provide you in much more detail, and it's step-by-step and all the tools and resources. Then you're going to learn the variety of strategies, which I also include in those trainings. You're going to choose your market. You're going to analyze a bunch of deals, not just to actually buy a deal, right? That's the end goal. That's the ideal case scenario. But when you're doing that analysis, you're building your skill sets, you're building your relationships, you're building your network. So then when it comes time to buy that very first deal, you will have so much confidence. You already understand everything that you need to as best as you possibly can to then make a great, informed, smart investment decision, which is where people go wrong. They get antsy and then just buy something. They are not cash flowing. It wasn't the best cash on cash return. It was a bad use of their funds. Like, don't do that. Do the analysis up front, develop that skill set. I analyzed like over 500 properties before I made my first investment. Mine was excessive. I did way too much analysis before I made my first investment, and that is known as paralysis by analysis. You don't want to get stuck in that, but that's where I was at, right? I had to connect with other real estate investors before then I had the confidence to actually buy my first investment property. That's why analyzing a bunch of deals, but also building your relationships, especially with other investors in your market, doing your strategy, is a cheat code. And then if you're an absolute beginner, the best way to start real estate investing is to house hack a 2, 3, or 4 unit property using a low down payment option so that you own a rental property now. You have gone through the process. It's less risk because it's closer to you. There's multiple units, which means that the income is spread out between the multiple units. You're going to live rent-free. And once you move out, you're going to make a bunch of cash flow, and you can use the projected income on those rental units to allow you to buy a bigger property than what your income is. So if you've got $40,000, $50,000 plus $1,000, like if you've got $40,000, $50,000 of annual income, this is the route. This is the route for you to do. Once again, live rent-free and own an appreciating asset. So if I was brand new today, this is exactly how I'd start, because that one deal will change your confidence and your cash flow forever. It's exactly what it did for me. Let's talk about the intermediate phase. You don't want to use a owner-occupied property. You don't want to buy something that you have to live in one unit. Great. Let's talk about how you're going to get there. what you should start doing in the intermediate phase is buy rental properties that are truly just rental properties, not something you have to live in, but they're just straight up rental properties. And the best way to start doing that is to get paid to learn. What the hell does that mean? Why would someone pay you to learn? Well, that is what bird dogging is. You get to build your skill and cash flow without needing to use your own money, because you're going to be finding deals for people you want to be more like. So once I've house hacked and built some confidence and learned deal analysis, or you think you're more advanced, you could skip that, I would start focusing on generating some active income and building the right relationships. The cheat code, I gave it away. It is bird dogging. You're essentially a bird dog, as simply as I can describe it, is you are a connector between a buyer, the person that wants to buy the deal, and the deal itself. Whether the deal is directly through a seller, someone else put it under contract, whatever, your job is to find a buyer and bring them the deals that make sense for them to buy, and then they pay you for it. So for me, as an example, I love to buy co-living deals. Typically, that means I'm buying bigger properties in major markets. So I'm looking for properties that are at least 4 bedrooms, 3 bath, ideally, and over 2,000 square feet. These are in major markets, major pad split markets, major co-living markets, and these tend to work great for the rent by the room strategy. So if I wanted to learn how to do that, don't be surprised when I tell you I got it all for you. I would literally go into the bird dog training and say, okay, I want to be a bird dog for Michael, for example, or anyone who's doing co-living, right? Or any of the 60 plus super investors I have out there that I train to be great co-living investors who know exactly how to work with bird dogs and are very knowledgeable. I would learn, okay, here's what he's looking for. Here's the markets he's willing to invest in. Great. Awesome. Okay, well, where are you going to get more data? Great. Pad Split is the co-living resource right there. Everything's literally laid out here for you. Here's where you can submit the deals and the information I'm looking for. Here's how you can analyze those deals. And then here's more training specifically for bird dogging. I can't make this a full-on bird dogging training right now, but that's exactly how I would start right now. So simply, if I want to take it to the next level and I haven't done deals, let's say outside of my local market or house hacking, or I'm trying to learn a new strategy, I would get paid to learn. And that's exactly what I did. As soon as I did a house hack, this is the exact strategy that I did. I went and connected with other investors in the markets that I was looking to buy in. And then I figured out, okay, yes, I want to be like this person. I want to invest like them. So the best thing I could do is learn from them and provide them the deals that they want to buy. So then I know exactly what they want to buy. And then I get paid to learn those strategies. Whether it's $2,000, $5,000, $10,000 per deal, who cares? You're making money per deal, but more importantly, you are learning the strategy of finding the exact types of properties that you want from the person you want to be more like in the markets that you want to invest in. That's how you get paid to learn. That is a massive cheat code. I don't know where else is paying you to learn. More importantly, learning from the exact mentor or person you want to be more like, massive cheat code. So if you want a bird dog, go find a couple, 3-ish active investors who are looking to invest similarly to the way that you want to invest, or who are already investing the way that you want to invest. Offer them massive value by learning their buying criteria, and then bring them deals that hit their buying criteria. When you do that, if it's a great deal they want to buy, awesome. You just learned the exact type of property they want to own. And you learn the exact type of property they're willing to buy, and not only buy, but then pay someone else to bring that investment. So they're willing to pay even more than the deal itself because now they're paying you. Awesome. You are learning their buying criteria. If it's not a great deal at face value, you're going to learn and get their feedback. Why do they think it's not a great deal? What could you do differently for this deal? Maybe it doesn't have the returns that they want. Great. Do they see a potential to make this a great deal? That's a lot of what we do. When we buy deals and bird dogs bring us investments, it's, hey, this deal doesn't work now, but it could work if we get these deal terms. Great. Now you've learned how could you have made this deal a better deal that then makes sense for your buyer. On top of that, if it gets bought, great. You bought it. If they don't want to buy it, they'll explain to you, hey, this is why this one does not fit my buy box. So then you know, hey, these are the types of properties I should be avoiding. Because if Michael is a co-living investor in these markets and I want to be like Michael, I want to buy deals like Michael does, either A, I'm getting paid to bring him deals that I know he wants to buy. B, he's telling me why this deal wasn't good, but how he would buy it. Or C, great, I'm learning the types of deals I should avoid because they're not ones that Michael would want to buy. Amazing, like literally incredible. And then the final step of this, you don't get stuck as a bird dog. You're learning the skills. You're making $5,000, $10,000, maybe $20,000, $30,000, $40,000, $50,000 by the time it's all said and done. And I've done dozens of these, so I've made a lot of money as a bird dog. This is no joke when it comes to generating active income, if that's something you need to build your reserves, to build your confidence. But the main reason for bird dogging isn't just the money that you generate. More importantly, it's the education that you get. Because then now you're going to transition to step 3. You don't stop as a bird dog. You transition as the one owning the rentals. As you're getting paid from bird dogging, as you are learning all this stuff, learning how to find these deals and then make sure they're great and profitable based on what your investor, your buyer is looking for, you can take that income that you've generated and invest in buying those actual properties. You've already done the hard part. You've already learned how to find great deals and you've learned to avoid the bad ones. Now you just choose which ones of those are you going to buy. This is how you go from learning to earning to owning through one of the best freaking cheat codes. If I can give you a piece of advice, you're not chasing money, you're building mastery. You're building the skill set during this phase. Does that mean you're not going to make money? No, you're a bird dog. You're going to make money. But there are certain strategies in which you will get paid more. Typically, like a fix and flip investor will pay a bird dog more because the way they generate income is all at once, where real estate investors, like long-term buy and hold investors, like myself, we make money over the life of the deal, but that limits how much we can pay up front for it. So a fix and flip investor might get you more of a bird dog fee, but if you don't want to be fixing and flipping because you don't want another job with a lot of risk, you're going to have to forego some of that bird dog fee, but you're going to develop the right skills and the right relationships to work with buy and hold investors if your true goal is financial freedom, right? Fixing and flipping is good for active income with risks. Buying and holding real estate is great for financial freedom and the wealth building. So you have to choose and understand that if you're working with buy and hold investors, they tend to pay less than a fix and flip investor because the way that we make money all up front versus over the life of this investment. It's up to you what you need to do. If you really need money, like really bad, okay, go the fix and flip route. It's still better than doing nothing. But if you're really focused on actually being a successful buy and hold real estate investor and learning as much as you can from the people that you want to be more like, that's the buy and hold investor. That's working with more buy and hold investors so you can do that thing. Because you also want to develop the skill set of finding those deals, and then you just decide when you're the one buying those deals. So if you're focused on fix and flip bird dogging and you don't want to own those, well, you got to reinvent the wheel. You got to relearn the skill set for buying and holding investing. All right, to summarize, in the intermediate phase, I recommend getting paid to learn. Be a bird dog. Find deals that people you want to be more like, investors you want to be more like, want to pay you for those deals. Develop that skill set. So then you learn, earn, and own, and then you get into the owning phase. I'd honestly even include that in the beginner phase. If you cannot house hack, right? If you are not able to house hack, great. Just go straight to the bird dog phase. Still develop the education, the market, like understand your market analysis, like good stuff. But instead of house hacking a property, you're going to just bird dog deals for someone else until you decide you want to buy those. Honestly, that's my beginner to intermediate kind of phase, because intermediate, you can just jump straight into being an investor if you already are. That's kind of where we're going to get to the more advanced phase, because most intermediate investors, they're doing the basics of real estate investing. What does that mean? They're buying properties that are traditionally financed. I do creative financing instead. They're buying properties as long-term rentals. I buy properties that are primarily rent by the room, and they're using their own money to buy deals when I'm raising money from capital partners to buy these deals. So intermediate could be long-term rentals, using your own money, using traditional financing as well. Personally, if I was to restart, I would just not do that. So for most people, that's where they're at. That's their end all be all. That is so far away from what I'm trying to do. So if I'm giving you the specific advice, I would focus on finding great, creatively financed co-living rentals that an end buyer wants to buy. You're getting paid while you learn, and then you decide when you're the one who buys those deals. That's what I would do in my intermediate phase. That's exactly what I did do as well. So the advanced phase, we call this the wealth multiplier phase of your journey. You are very focused during this on you're going to stop trading your time or your savings for growth. That's what this whole section is about. You're going to develop the right skills and strategies so you no longer have to trade your time to earn money or trade your time to do every single part of this journey, so that when you want to grow your skill set, you want to grow your portfolio, you're not doing it through your own personal savings, you're doing it through the right skills and strategies. Once you've done a few deals, whether it's your own deals or as a bird dog, the next level for you is all about leverage, right? I just gave you the cheat code for it. This is what I call my super investor cheat code. This is what has allowed me to buy so much real estate in such little amount of time and generate much higher returns than the majority of other investors. And on top of that, I've been able to do an unlimited amount of deals based on my ability to raise money from others rather than trying to save my way through real estate investing. The three levers, the three skill strategies that I recommend you focus on in your advanced stage: creative financing, co-living, rent by the room strategy, and then raising capital. Really, it's my 3 C's: creative, co-living, capital raising, right? Just remember those 3 C's. Let's break each of those down. So creative financing, right? The traditional real estate model, you go to a bank, they're going to tell you you need a 25% down payment on a property, on a $400,000 property. That's $100,000 just for the down payment, no renovations, no reserves, nothing else, just for the down payment for the loan. And they're going to charge you a 7% interest rate on that. With creative financing, it's like, why would I spend $100,000 to buy a rental with 7% interest rate when I could buy it for $20,000 and a 3% interest rate? That's what creative financing is. Creative financing allows you to buy real estate without going to a bank. When I'm buying properties subject to their existing loan, I'm taking over rental property. I'm taking over properties that I'm going to use as a rental with their existing debt in place. That means my down payments tend to be extremely low. On top of that, my interest rates are freaking phenomenal. This is how I'm buying right now a property at 2.99% interest rate, and I've structured it creatively so I have very little money to actually put into that I need to put into this investment. So if I was going to buy a $400,000 property, I'm not paying a 25% down payment, $100,000. For that same $400,000 property, I can buy it for a $20,000 down payment. What does that mean? That means I could buy 5 times more properties with that same $100,000. Duh, that's how you achieve your goals faster. Seller financing, when you're, instead of taking over someone's existing loan, what you're doing instead is the seller is now the bank. So instead of taking over someone's existing loan, which can mean low down payments and very low interest rates, what that means is I'm structuring directly with the seller. That is how I literally have another deal right now where it is a 0% interest rate. And so it's a 10% down payment. How much is this? Is like almost a $700,000 property. So $70,000 down payment, 10% down payment, as opposed to the 25% from the bank. I have no idea what that is. What is that, like 140, like almost $200,000 if I went traditionally. But more importantly, instead of paying 7 or 8% interest, I'm paying 0% interest. All of my money is going to pay down the debt, and I'm wasting none on interest. So the same payment would be the same monthly payment. For me, it's going to be, I don't know. If I went traditional financing, it'd be several $1,000s more, and most of that would be wasted on interest, where all that money that I'm spending on this loan through the seller is all paying down my debts, building my wealth faster, and generating me way more cash flow. And I'm putting way less down. I could buy more properties. And the other strategy is hybrid. You're combining subject to and seller finance. Sometimes they have equity. Sometimes they have an existing loan. If they have both, you don't need to pay all the equity out or pay off the full loan. You could do something in between. Take over the existing loan, pay them an upfront fee for their equity, give them some cash, and then finance the rest. It's a whole other deal that I'm doing right now. With creative financing, you are saving a ton of cash needed to buy these properties. You're getting way better terms on your loans, which means you are generating way more cash flow. You're building way more wealth, and you get to use that same amount of money that you would have invested to buy way more properties. That means you get to achieve your financial freedom goals way more quickly with less investments. If you're making more money per deal, you are achieving your goals. If you're making way more money per deal, you're getting more cash flow. You're achieving your goals with less properties in a shorter time frame. For using less money to buy each deal, you're buying way more properties with the same amount of money, allowing you to buy more of those properties more quickly, and once again, achieve your goals much more quickly. Traditional versus creative, right? Same property, same rent, right? That's going to be the same thing, but because the debt is different, because it's creative versus traditional, I can buy way more properties that generate me way more returns. That is how you scale. It's not through more savings. It's through building the right skills and strategies, through leveraging the right skills and the right strategies. All right, creative. I think I made the case for it. If not, I've got plenty of trainings for you to go watch that. Next is co-living. Co-living is how I turn an average rental that can maybe make $100, $200 a month into a cash flowing machine. Something that instead of generating me $100 a month is generating me $1,000, $1,500, $2,000 plus a month of cash flow. That means I can achieve my goals with way less properties. If it's $10,000 and I'm making $100 a month and I want to achieve $10,000, I would need 100 properties. I don't want 100 properties to get there. I can do the same thing with a $1,000 a month cash flow per property, do the same exact thing with 10 properties through co-living. So why would I own 100 properties, 100 rinky-dinky small properties in worse markets when I can own 10 great properties that generate me way more cash flow, that are easier to find and buy, that are easier for creative financing, that provide me more cash flow, more wealth, and it's way easier to manage 10 over 100. The cool part too with co-living, it's also affordable housing for my tenants. When I'm renting it out by the room, it's at a lower cost than they can rent a studio or one bedroom in that same market. So it's great because I'm providing affordable housing to markets that need it, and it provides me way higher, like way quicker and better path to financial freedom. Understand this about co-living. Bigger markets, more cash flow, higher overall returns. Achieve your financial freedom way more quickly with less properties. You combine the co-living model with creative financing. Now we're talking about not just doubling or tripling your speed. This is how you get to 5, 10 times the results by combining creative with co-living. You're getting more cash flow per property and you're buying them with less money and better terms, building your wealth, building your cash flow more quickly. And the final piece to all this is capital raising. This is the ultimate cheat code, is learning how to raise money from other people to buy real estate. To build my $25 million of real estate, it's taken around $6 million. So that $25 million of real estate that I've bought, it's taken around $6 million to buy, renovate, furnish, and have reserves for that real estate, for that portfolio. Well, let's do some very simple math. I could have tried to save $6 million myself to build that same portfolio. I've never made $150,000 in a year, but let's say I made $150,000 a year. And not only did I make $150,000, I saved all of it. I didn't spend a single penny of that. I saved every single dollar of that, $150,000 a year, which is literally impossible for the majority of us. If I did that, it would have taken me 40 years of savings to have saved $6 million to have built my portfolio that I've done in less than 5 years. Okay. So am I going to try to earn 150 and save every single dollar, not spend it? And even then it would take 40 years to develop that $6 million to buy that portfolio. No, hell no. That just was not possible. It does not hit my time frame. It would be impossible to save that much money. The majority of people can't even save $10,000, $20,000 a year, let alone $150,000 a year. What I decided to do instead was I learned how to raise capital. I learned how to structure great deals that create win-win scenarios. First, a win-win scenario for the seller and myself using creative financing. Secondly, to create a win-win scenario with people that have money and no time, or they have money and less experience, and then provide them a win-win scenario. They end up with a great investment, with a great partner. I end up with the money to buy my deals, and I get to buy all those deals as many as I want without my own money being a bottleneck. So instead of doing this over 40 years, I did it in less than 5 by thinking from that mindset. How can I provide a great investment or a great process for the seller so that we end up doing this deal at terms that make sense for both of us? And how can I do the same thing with capital partners? How can I provide them great investment opportunities that they are willing to fund and partner on these deals so that we all end up winning in this scenario? And that's what I did. Because once again, strategy and skills over savings. Like I cannot emphasize that anymore. The cool part about it is raising capital gives you the ability to scale without waiting decades. Okay? I literally, instead of having an insane amount of income and savings and waiting 40 years, I was able to achieve way better results in way shorter time frame without having to wait forever because I focused on skills and strategy over just trying to save my way there. You see why I'm talking about like these advanced strategies are all about developing your skills and strategy over trading your time or trying to build savings for growth. Because that model, that traditional model, not just traditional financing, but that traditional model of using your own money, long-term rentals, and traditional financing is the typical path for 90+% of people. That's why they can't actually achieve the results that they want in the time frame that they want. And it takes them way longer, way more properties, and they pretty much can't save their way there. Screw that. I'd rather do exactly what I did, which was learn these advanced strategies and implement them. The first one I learned was creative financing, then the co-living model, then raising money for my deals. If I was to tell you to go in any sequence, it'd be that. You could swap co-living and creative financing. If you're doing co-living over long-term rentals, you're already at a massive advantage. If you're doing creative financing over traditional financing, you're already at a massive advantage. I would focus on those two first and foremost, and then capital raising to fund those deals using little to absolutely none of your own money as the final advanced lever for you to pull. So just putting this all together, right? Let's just zoom out and connect some of the dots. As a beginner, the first thing you want to do is just learn the game, learn the process, develop your financial freedom path, understand the basics of real estate investing, and then analyze 100+ deals in your market using the strategy that you want so you get really comfortable and confident at that. And you're building your skill set, your knowledge base, your connections. And if I was going to buy a property the way that I did, exactly what I recommend everyone to do, if you have the means to do so, I would house hack a 2 to 4 unit property, live in one unit and rent out the others. Then the intermediate phase. Okay, cool. I've done what I can do through house hacking. It's too slow. You have to wait a year. You have to use your own money. It's traditional financing still. The next stage is learning how to be like the buyers you want to be like. Bird dogging. Let me find buyers that I want to be more like and then find them great investment opportunities. I'm going to build those relationships, build those skill sets, build my reserves, build my income in my reserves. And then at one point, I'm going to turn off that lever and say, you know what? I'm done bringing you deals. I appreciate everything that we've done. I'm going to buy these deals. More often than not, you can actually do all of it. That's what I did. I wasn't trying to be a bird dog forever, and I wasn't. I just, for every 5 to 10 deals I was bird dogging, I was choosing the best one for myself because I didn't want to buy 10 deals at one time. That's not a great strategy. So I was still making money on the 5+ deals to others and then choosing the 1 or 2 that I wanted to buy when it made sense for me to buy those deals. So house hacking as a beginner, if you want to skip that or you cannot do that, your beginner stage is bird dogging. For those of you who have already done some real estate, bird dogging is a great way to start learning some of the advanced strategies, especially co-living and creative financing without any of the risk because you're learning this stuff and bringing it to someone who's proven with those strategies. For example, that's exactly what the bird dogs for me learn how to do. You get to learn how to do that and get paid for that. And then at one point decide I'm going to be the owner of the app of the deals that I'm finding. And if you're advanced, if you want to go straight into advanced, you're already an intermediate and or advanced investor, you want to take things to the next level, learn the 3 C's: co-living, creative finance, capital raising, right? You see how this progression is very linear and it all builds on top of each other. The beginning, learn the game. Intermediate, learn the game at a higher level with less risk and get paid for it. Advanced, take everything you've learned and done and take it to the massive next level So you're no longer trading your time and your money. You're trading your skills and strategy to do way more deals with way better returns so that you achieve your goals way more quickly. For me, I achieved my goals within the first 3 years of investing. I could have stopped, but why would I at that point? I showed you on the graphic of the benefits of real estate investing. I've got all this momentum. I know exactly what I'm doing. I'm very confident. I'm very knowledgeable. I've got a lot of capital partners. I've got a lot of relationships and opportunities. That's why I went from 10 million to over 25 million. For the majority of you, you don't need a $25 million portfolio. I don't need a $25 million portfolio. I don't need the $100+ million portfolio that I'll end up with. But you probably will need a few $1 million of real estate to achieve your goals. Let's say the bare minimum. Let's say you can do 10 properties that cash flow you $1,000 a month, and you want $10,000 a month of cash flow, right? So 10 properties, and they're each $100,000 to get into. Well, you're gonna need $1 million of money to buy those deals. Each one, let's say, is worth $400,000. That's a $4 million portfolio to achieve your goals. So let's say you need somewhere between a $3 to $5 million portfolio to achieve $10,000 a month of cash flow. Great, that's really your goal. You don't need 10 million, 25 million, whatever. But the cool part is, once you put all this together and get really freaking good at it, then you do a lot of what I do. I now have all these skill sets. I can continue growing and scaling, and I could do more advanced strategies. People would say, well, wouldn't you start with RV parks or multifamily? No, I would not start with that. That's a dumb way to start because it takes a lot of knowledge. There's a lot more risk, and there's way less of those investment opportunities out there. And now you're competing with people at a much higher level when the co-living model is way more accessible, way less risk, and there's way more investment opportunities out there. Okay? That's why I go co-living. Not that RV parks are not phenomenal. It's not that multifamily is not phenomenal. It's just for a different stage of investor. It's where I'm at now with a huge portfolio that I no longer need to build cash flow. I can focus on these more advanced strategies, which is what I recommend that you do as well. Just because you're financially free does not mean you stop working. You're not retired. You're not decrepit. You're not done. I did this before I turned 30 years old. You think I'm done working? No. I just get to work on what I want, when I want, from wherever I want, whenever I want, with whoever I want, which means I get to actually enjoy the work that I do, not work for someone else and have them potentially fire me, cut off my insurance, lower my pay, make me come in at times that I don't need to. I just went, we went to the pumpkin patch Monday, decided to have a pool day later that afternoon. Yesterday went golfing midday. Like, I get to make those choices. I don't have to ask a boss for permission. I don't need to ask anyone for permission. I mean, I talk to my wife, right? I mean, if you're married, talk to your spouse, but I don't need to go and get approval from someone 30 days out, and they might say no, even if I have PTO saved up. That's crazy. I'm not living my life like that forever. And I'm fortunate I don't have to do that. So the exact playbook that I used to go from $0 to $25 million in real estate without waiting 40 years to save up. You don't really need more money. You need more clarity, you need more consistency, and you need the right community. For me, I help intermediate and advanced investors actually implement creative financing, capital raising, and co-living. I'm not saying you can't learn those strategies from people. You can learn it. I actually help you do the thing and provide you all my tools and resources in my Super Investors Mastermind community. If you are someone who's done traditional, you have some reserves saved, I don't care if you've done creative or not. I just care that you've done the thing. You've done some real estate, and at least you've bird dog wholesaled, even if you haven't bought properties. You have a certain amount of reserves set aside. Let's say you have $20,000 of reserves set aside to get your journey started, and you know that you want to achieve your goals way more quickly with way less risk and way more results, right, per deal. That's what I help investors do through my Super Investors community. If you're just learning and you're just starting out all this stuff, well, great. I showed you so many free resources I provide you. It's not like I help Super Investors take this to the next level, but I give you guys more for free than most people charge tens of thousands of dollars a month for. If you want to learn real estate investing, if you want to set up your budget and personal finances, if you want to learn bird dogging, if you want to learn co-living, I've got a ton of free resources for you. What's going to be coming out soon is I'm going to have an entire co-living community, very low monthly cost, to get an entire co-living workshop, step-by-step education on how to do co-living from wherever your investing experience is, and do it as safely and effectively as you possibly can, plus all the tools and resources I use for co-living, not just the education, but the actual tools and resources, live calls with me and team members to get more support with analyzing deals, to get more support with analyzing deals, deciding like, is this a good property or not? How would you renovate it? You know, you want access to my project manager, deal analysis, strategy, Q&A, all that good stuff. That's going to be coming out soon. So I can have a better bridge to get those that are more beginner, to get you a couple co-living deals, to then get you into super investors if and when that's the right time for you. Because at the end of the day, you really need all three C's: co-living, creative finance, and capital raising, especially when interest rates are this high. You need all of that to achieve your financial freedom way more quickly. You can not use 1, 2, or 3 of the C's. It's just going to take you longer. You're going to have to own more properties. Why would you do that when you can do it faster and better, build more wealth, build more cash flow with less assets and little to none of your own money? I mean, it's not even a question, right? When I phrase it like that, it's almost obvious. All right. So if I had to start over, that's exactly how I do it. I would start small, I would master the game, and then I would scale through skills and strategy, not savings. If you want all of those tools and resources that I showed you that are absolutely for free, you are more than welcome to leverage my Wealth Through Real Estate School community. And the cool part is, instead of taking that money that you're making and wasting on random materials and cars and whatever the hell people are wasting money on, do what I did. Take that money and invest in your freedom. Don't buy more stuff, buy your freedom. There is no better luxury in life than having total control of your time and what you do with your life. Humans are too beautiful and too perfect to be wasting their entire life, the majority of their days, stressed out, commuting, all this other crap, doing work they don't care about. People are too beautiful and too perfect to be wasting the next 40 plus years of their life, if not the entirety of their life, on a job that they don't like, that means nothing to them. The goal is to become financially free as quickly and safely as possible, so then you can do whatever you want with your life, whether it is more investing, whether that is giving back to charities and causes that you care about, whatever. If it's like me, it's helping other people on their own journeys. Whatever it is for you, that's where you need to get to. That's what financial freedom will allow you to get to, so you can actually do what you care about in life, not just trade away the majority of your time to make money to barely scrape by and pay your bills. That's not life. That is the freaking hamster wheel. That is the rat race. Your goal is to get out of that. Learn how to buy your freedom, not just use all your money to buy stuff. Thank you guys. If there's any questions, I'm going to answer them real quickly. Let me drop the link because people were asking. There's Wealth Through Real Estate directly dropped in there. All right. Questions. Thank you guys. Thank you for all the kindness and the niceness I'm seeing in here. List of markets or focus on a narrow buy box? For sure, Lisa. I gave you that, my friend. Maybe you asked that before. Right here. Go learn how to bird dog. Whether it's for me, other super investors, whoever, go learn how to bird dog. I tell you exactly the deals we're looking for, where to get the data to analyze these deals and understand why I'm investing in the markets that I invest in, how to submit deals, the calculator I built and use to analyze these deals so we're speaking the same language, and then trainings on what bird dogging is, simple, short, simple video, longer explaining bird dogging, and then how to actually analyze the co-living deals that you're bringing me specifically. This is if you want a bird dog for me because you want to be a co-living investor, because you know, rightfully so, it's the best investment strategy for you to focus on because of the overall returns and the accessibility. It's not just about the returns, it's also about the accessibility. This is another thing with RV parks. Well, I can make $10,000 or $5,000 a month on one RV park. Great. Go do that. Understand that it's going to take you a lot longer to learn the game of RV park investing. You're competing with a lot of people, but more importantly, there's way less properties. There's 100 million plus real estate properties out there, millions of them that work well for co-living. There's 14,000 RV parks in total in our country. You're competing for the few of those that are available for sale, and you're competing with the people that are already doing this thing at a super high level. Where in co-living, we're just at the start of this thing. So you're going to get way better returns, way more easily, with way less of a learning curve, with way less risk. So yeah, co-living is the best rental strategy, and it dominates short-term, mid-term, long-term. First, it's not even a comparison. And there's some strategies that are great, large multifamily, RV parks. But I understand those are way harder to get into, and you're competing with a different skill set, institutional type investor. And there's much less of those properties available, especially for sale, than co-living properties. LaShawn needs a $25 million portfolio. Well, LaShawn, I gave you the roadmap of exactly how I did it and how I'd make it even faster. Thank you guys. I appreciate you guys. The name of my community. So the free one is Wealth Through Real Estate. Just tons of free education, tools, and resources for you guys. Everything that I wish I knew when I was starting out, just learning this stuff, just learning real estate in general, without all the fluff and noise. It's like, here's the direct stuff you actually need to know. Here's the step-by-step path, just like this training. Then when I was buying my first property, what did I need to know then? And what did I learn? And then as I started to learn and grow and scale, co-living, bird dogging, all that stuff, as I was going into becoming an intermediate investor, all the trainings and tools and resources there as well. That's also a lot of stuff I provide on my YouTube channel, stuff I share on Instagram. I provide you the tools, knowledge, and education that I wish I knew and learned for my first several years of investing. And then super investors, my mastermind community, is for those that are looking to take things to the next level. Does not mean you have to already be an experienced real estate investor. It means you need to have the time and money to be able to grow and scale your portfolio, the commitment to do so. And I need to know that you're going to actually put in the work. You're not here to pay me to join a community for super investors. You're not here to just pay to then just be part of something else. I need you to be committed to your financial freedom, because I cannot make you achieve financial freedom. I could provide you every tool, resource, everything, but you have to be committed to your goals, and you just want the roadmap, the tools, the resources, the best available out there, so you can actually implement this stuff, not just learn it, not just watch calls, but actually implement it and have the support that you need to actually achieve your goals. That's what Super Investors is for. Let me help you do so at a much lower cost than anyone else out there, but more importantly, with an actual step-by-step roadmap process that is not just proven by myself to have achieved massive results, but dozens of other super investors who have achieved massive results regardless of where they were starting at. All right. Oh, let's see. Good cash on cash return. That depends on you, and that depends on if you're raising money for your deals. I would say the standard rule of thumb that was the case when interest rates were lower was a 10% cash on cash return. For most traditional investors, that's what they were looking for. They'd have to buy little crappy properties in random areas, like, I don't know, some random part of Missouri, buy a $100,000 property or $80,000 property, and make them $100, maybe $200 a month of cash flow on the best case scenario. And they're looking for a 10% cash on cash return. Most of those guys who have not learned or adapted to the new world, the new investment market where interest rates are really high, where it's not cheap and easy anymore, who did not learn creative financing, learn co-living, learn whatever, they're just happy to make any cash flow right now. They can make $1, they're happy to invest in that deal. That's dumb. That's like literally so dumb to like buy properties that are not generating you really high returns. For me, I'm not buying any property that's not generating at least a 10% cash on cash return. For me, primarily with co-living, I'm buying 15% cash on cash return or higher. I have plenty at 20%, 25% or higher, but I understand that. That's for the deal itself. For me, as someone who is raising capital for my deals, I'm getting infinite returns because I'm putting in no money. I'm bringing the deal and understanding how to structure it effectively. My team and I are owning and operating the asset with our partners. They fund all the deals. So the deal is getting 15+% cash on cash return. My returns are infinite. I'm getting cash flow without putting any money in, getting cash on cash return and all the other wealth benefits without putting any money in. My cash on cash return is infinite. I'm making no less than $700, if not $1,000 a month of cash flow per property, even after accounting for my capital partners' returns. Hopefully that gives you some great insight there. I don't know if very many people even share that stuff. I'm here to just help you guys on your journey. All right, my friends. All right, for a lot of you guys, I will see you this weekend in Arizona. I'm doing a co-living meetup on Friday with my brother, Eddie Marin. in Phoenix. So it's on my Instagram if you want to go. And then for my Owners Club family, I will see a lot of you guys this weekend. Excited to go golfing, hang out with my mentor, Pace Morby, and all my other real estate investing friends. So go be in the right rooms. If you're looking at achieving financial freedom through real estate investing, especially leveraging advanced strategies to get there more quickly with less of your own money and higher returns with less properties, that's super investors. Creative financing, co-living, capital raising. With that, you'll have a blessed day.